Hello my friends, my name's John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and please make sure you are aware of all your risks prior to placing any trades. Just to be clear, today we're presenting a hypothetical computer simulated trade. It's believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with Locke in Your Success LLC, where myself and my team of mentors are here to help you win in the markets and in life as well. And today, I'm here to bring you into the realm of what we call high probability options trading, also known as income trading or usually positive theta trading. And this is where we utilize option strategies to benefit from the passage of time rather than depending on price movement alone in order to make money. This means that we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to make money all the time, but it does mean that we have a much higher probability of making money than we would if we were purely going directional. The trading strategy I'd like to demonstrate today is a strategy we call the X4 version 14 or V14 for short. This strategy is what we call a conservative market neutral broker wing butterfly strategy that we trade on the SPX. The trade itself requires a minimum of $2,250 planned capital in order to trade. The example size we're going to do today is what we call a 10 lot, and that example size for planned capital is going to be $22,500. The profit target on the strategy is going to be up to 11.1%. or $2,500. We also have a reduced profit target that's going to be $1,500 and a further reduced profit target of $750 if certain events were to happen in the marketplace and we want to cut this short a little bit. Our exit loss trigger is going to be 11.1% or $2,500. All right, so let's take a look at the strategy. First, let me explain what you're looking at here on your screen. This is an analytical software called OptionNet Explorer. It's something that we use with our more complex options positions so that we can understand them better in a graphical format. What we have here is we have our asset, which is the SPX. We have the date, it's Friday, April 30th, 2021. Over here we have our expiration cycles for our options. Now we are doing a trade that is going to start 77 days to expiration. So we're in the July 16th, 2021 expiration cycle. We are 77 days to expiration. It's April 30th, 2021. This is the option cycle that we're going to use. Our call strikes are on the top, our put strikes are on the bottom, and of course we have the strike levels here. This here is going to be our actual analytical graph. This tells us what our position is worth not only today but over time. So what we have here is the asset price along the bottom. We have our profit and loss numbers here up the right side. We have a sharp-edged looking picture here, which is called our expiration graph. And I'm going to zoom in on this a little bit. And our expiration graph is going to represent the value of this position at any given price point on the Russell 2000 at expiration time. And what we have here on this other line here that you see with the red dot on it is what's called our T+0 line, or our time plus zero, or today. Of course, we can advance and move this line here within our software to change what it looks like going into the future. And this line tells us what the value of our position is as of today, or at least it estimates what the value will be with any given movement of price on the SPX. And over time, this T+0 line is going to start to take the shape of our expiration line. Along the bottom here, we have our current margin in the position. We have our profit and loss here. We have our delta number. Now, for those of you who are not familiar with delta, delta tells you the amount of money this position is estimated to gain or lose with $1 in price movement over the next $1. And that's going to change with time. It's going to change with implied volatility. It's also going to change with price movement. And we have gamma, which is how fast our delta tends to shift. We have our vega, which tells us, at least in theory, what the position, how it's going to react with implied volatility changes. And then we have our theta, which is here, which tells us how much money the position is likely to gain or lose over the passage of one day. So generally, when we do these strategies on the winning trade, we're usually positive theta, but there's two strategies we use that actually post a negative theta. Sometimes the Super Bowl is going to post a negative theta oftentimes, and our X4 version 14 sometimes on entry posts negative theta, but that changes over time and becomes positive theta later in the strategy. Now, a lot of so-called income traders, they are what we call theta mongers, and they're looking to trade the absolute most positive theta type of a position. Unfortunately, there is a side effect with positive theta, and that is price movement sensitivity. And one of the benefits that we have here, particularly in this market where we're getting a very large amount of price movement, chances are the asset price is not going to be here where it is now in even 10 days. We're getting a lot of price movement. So that being the case, it's actually more beneficial to have a very low or sometimes even negative theta number coming into the position. Like I said, this will change over time. This will eventually become positive theta as time passes, and we're going to have very little sensitivity to actual price movement if we get a big price move, for example, as far as getting a drawdown. So that's one of the reasons I love this strategy, and it's been doing fantastic, certainly for the last 2 years. All right, so let's take a look here at our setup. So first of all, what we're going to do is we're going to buy options. In this case, we're doing a 10 lot, so we're going to buy 10 options, 10 put options at the money. Right here at 41.80, you can see at the money is, or you can see the last asset price here at this time is 41.83.64. The closest number to that is going to be 41.80. We're going to do a 40-point upper wing. We'll sell 20 of these 41.40s, and we're going to do a 60-point lower wing, and we're going to buy 10 4,080s. Now, when we do that, let me just take out this put here. We're going to have a delta of positive 15 on our position. The X4 version 14 does not allow more than 9 delta on a position this size on entry. So to correct that delta, what we're going to do is we're going to buy, in this case, 7 delta, which is right here. And this is going to be our entry position. From here, what we're going to do, if the asset price goes down and exceeds our short strikes, then we are going to roll back and reset the starting position. To the upside, we're looking for this position to turn negative delta, which it will do at some point in many types of price movement and market scenarios. Sometimes it never does. And we just take whatever we end up getting for a profit here. So one of the things I would like to mention when we actually enter these, I was saying we buy 10 4180s, we sell 20 4140s, we buy 10 4080s. We do this in one order. You can do this in one order in your broker called a butterfly, and you put this order in as a broken wing butterfly, I should say. And then afterwards we can come in here and we can add the put protection in here for the position. So this is going to be our entry position for this trade cycle. Now, just let me take you forward with this, and you'll see how simple this strategy is. It requires very, very little maintenance. And I'm just going to kind of click here day to day. You can see we got a significant down move here, but we have not hit an adjustment point. We're still positive delta, which is fine, and our profit and loss is drawn down a little bit, but nothing to be concerned about. If we have an 11.5% drawdown, that's $2,500. A $200 drawdown or $300 drawdown is really nothing. So we're sitting, moving back and forth here. You can see we're really starting to take off. Ooh, Ooh, this is a big hit to the downside. Okay, so now we're all the way down to 44. Let's take a look at the price chart. The price chart doesn't really matter here, but let's see what happened here. So we came in, we got knocked down a little bit, we had a big up move, and then we started to come back down. And right now we're down about 466. If we go to Wednesday, ooh, this is a big move. Okay, so let's look at what happened here. So Wednesday, after we've gotten a couple of days of pretty hard down movement, this was a pretty big down day. This was a pretty big down day, even though it's a green candle. We closed here on this day, which was the 10th. We closed significantly lower on the 11th. And now here we closed a lot lower. 83 points in a day in the SPX. I mean, we've had bigger moves certainly, but that's a very, very big price move. And despite the fact that it's going against us here, you can see we're only down $186, which is one of the things I really love about the strategy. It tends to be very dynamic with our down moves here. So what we're going to do, because we are below our short strikes, and this is another thing I want to point out. You can say, well, we were below our short strikes earlier in the day. Why didn't you make the adjustment earlier in the day? Another thing I love about this type of trading in general, or the type of trading we tend to do here at Locking Your Success, is we want to only check our asset price once a day. We don't want to have another job. In other words, we don't want our trading to be a job. We want our trading to be able to come in here, and we want to be able to not have to watch the market all day. We'll just take a look at the market once a day, and if we happen to have to make an adjustment, then we'll make that adjustment. Even in this point here, I think we started on April 30th, and that was the day we had to do a little work. We had to enter the trade, but from that point on, we've done nothing, and it's May 12th. It's literally 12 days later, and we've really done nothing other than just take a look at the market and say, oh, wait a minute. In other words, when I do this, I can say, well, if the asset price isn't at my checkpoint time, if the asset price isn't under 41.40, I don't have to do anything here. The only other thing I might have to check is if it goes negative delta later in the trade, but that's not going to be a concern at this point. So it's really as simple as that. But now we had an unusually large down move in the market, so we're going to want to roll this back. So we essentially roll back to starting position. We close this position out, and we roll back. Remember, we said we put the long strike at the money. We have 4,070. We go down 40 points. Short strikes at 4,030, go down 60 points. Long strikes at 39.70. Now, sometimes we don't have to move the put. I'm not sure if we had to move it here or not. Let's just ignore the trade for a second. Yeah, we did. So we ended up moving the put. We took the put, we closed that, and we moved it to 31.50. And we did that because without the put, we are too positive on our delta number. Yes, we are still negative theta, but as you'll see, that doesn't necessarily produce a bad outcome. Matter of fact, it produces a very good outcome a lot of times. So here is where we are. There's what the price chart looks like. Let's move this forward. 65-point up move the next day. Another thing I love about this strategy, you get these V reversals, which is what this was. The strategy performs extremely well, or tends to perform extremely well in most scenarios where it encounters a V reversal. So let's move forward here. Another 63 points. We're up 772. And let's just kind of skip this ahead a few days. Now, we didn't talk about exits here. We're going to exit if we hit a drawdown of $2,500. That's our exit loss trigger. Our other exit is going to happen when our cycle 2 cycles out is 77 days to expiration. So right now, our 1 cycle out is 92. So we're no ways near exit time here. And the 2nd cycle out is going to be 120 days still. So we're really going to be in this till this is 77 days to expiration. So that's 20 and 23. It's 43 days we're going to be in this position. And what I love about this is like I said, it's very hands-free, and I don't believe there's actually another adjustment in this strategy. So that being the case, I'm just going to hop this ahead, 4 or 5 days at a time here. So let's do 1 week. We'll go to the 27th, and as of the 27th, and again, remember, if I'm monitoring this, all I have to say is I don't have to do anything unless the market comes over under 40.30. So I'm literally, I don't have to look at this analytical thing all the time. And realistically, I'm not going to hit a negative delta number here, at least for some time. So every 3 or 4 days or week here, I might want to take a look at a high number of, say, 4,800 on the asset, which is very unlikely. It's 600 points. Over time, this is going to end up going negative delta, but I don't have to check it every day. I can wait another week. So realistically, I go another week here, June 3rd, and this is what we look like. We're up 1232. Let me just go another week, or let me just go 2 weeks. All this period of time, I'm really doing nothing. You can see we're starting to get a little bit flatter in the delta here. We're up $1,720 approximately, and everything's going well. Let me go another week. Actually, yeah, let me go another week. I don't think there was another adjustment. I should look at the T-log. Okay, so I'm another week here. It's 22 days to expiration now. It's June 24th. Let me take a look at what I am for my September cycle. Is now 85 days to expiration. I'm going to be exiting this fairly soon. My T-log here. Yeah, so there's no other adjustments here. I'm kind of waiting for this to go negative delta, and if it does go negative delta, it's time for an adjustment. So let me 13. Okay, not a whole lot happening. The other thing I'd want to do too is take a look at here's June 30th. I did go negative. I got to be more than -1 delta on this size, so I was a little off on my rule set here. I have to be -1 delta, not minus 0. So it would be -0.1 delta if I had one contract. It's -1 delta if I have multiples. If I do have to make an adjustment at this point also too, remember I said we had a high profit target of 2,500. If I make the adjustment up here, that reduces my profit target to 1,500, in which case I would end up exiting the trade. So let's see how this actually went. I'm still flat delta here. And I believe that was the end of that trade. So let me undo this and go here. So here our September is 77 days to expiration. Therefore, I'm going to exit my July trade, and I'm going to start a September trade. In the meantime, I also have an August trade going on, so these trades do overlap. But even though they overlap, again, it's such minimal management. When you take a look at the amount of management we had over this period of this trade, I had the management of putting the trade on. I had the management of, just checking the asset price essentially for most of the period of time. And then I had the work of taking the trade off, which is really minimal for a fairly significant time period here. I think it's almost 60 days that it runs. So at the same time, I do have 2 trades going on, but even the management of that trade is going to be minimal also. And as of right now, that second trade looks like this. It's up $431, and everything is looking fine. And I'm going to close my July. I'm going to enter my September, which is going to essentially be entered the same way. Okay. Now, as for results for the year, I get asked for this sometimes. This is how the X4 version 14 has performed so far this year. We had a 10% gain in January. We had a very small loss in February. And this is one of the reasons I like this strategy too. Many times if it does end up at negative, it's usually very very close to zero. That doesn't mean we can't take our 11% or maybe a little bit more, but it's very uncommon. Our March was 8.6, April 11.7, May 8.8, June 4.4, July 9.32, and August 2.30 for a year-to-date trade-for-trade return of 53.8%. If you remember, we do have an overlap here. So if we have an overlap, then you'll want to account for that. And accounting for the overlap, it's 26.89%. Now, that said, a lot of times we're not using our whole planned capital amount in this strategy. So if we take a look at this trade here, and we take a look at our actual capital, remember it was $22,500 was our capital limit or our planned capital in this. We were well under $20,000 here, which makes the effective profit on what we actually had in the trade actually much higher than that. That's usually not the way we determine them because we want to be fair, trade for trade, and get a realistic representation of what we're actually getting for a return for the type of capital we're willing to put out there. But that's the way we do it here. So that is the X4 version 14, this episode's winning trade. If you like what you see, I encourage you to join us and discover how you too can follow along with this and many other great strategies as they unfold during our weekly trade update webinars called Options Trading for Income. Also, make sure to come on over to thewinningtrade.com, that's thewinningtrade.com, so you can learn about upcoming winning trade presentations as well as explore past winning trades. And you can also receive free bonus material. And while you're there, make sure you check out our free Trading Performance podcast, where you can learn to skyrocket your trading results regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video below, and we can get those questions answered for you. And I do answer these questions personally. Thank you for joining me, and I look forward to seeing you on the next winning trade.